Good Fed day, everybody. Richard, I think you won today.
Good morning, everybody. Fed or fed up?
Fed day. Richard was the first to say hi. Hugo, how you doing? Kman, Jan, how are you? Ryan, how are you? Jays, got a packed house here. Paul Penman, nice to meet you. So let me show my charts here. So wanted to start off with the euro. Okay, so if the Fed, it seems like the market's front running, 25 is okay. The market's prepared to. The only surprise I think could be, of course, 50, but him sounding more hawkish in the presser, but with everything going on, maybe he won't. But I just wanted to say that I think if we close back over 110.40 in the euro, that you could declare a low for some type of pretty good rally. Okay, because there's still 88 DSI, $85 bulls here. And we had a chance to turn bad the way we closed last week. And we're on the verge of getting back inside the wedge here. And I'd keep an eye on this. I don't know if we'll last till if we'll last till the end of the fiscal year, but this 10-year at new highs is not confirming on multiple time frames. There's a daily. So, I think when it comes to rates and possibly the yen, that it could be, buy the rumor, sell the fact on the Fed.
Yeah, actually, I got my longs. Because I'm in this mood of towards the end of the year, possibly putting a top in place, but not sure how far beyond that older high 118.60. Yeah, come April, there may be a big change coming. It seems like the Japanese political scene is starting to get not very, but just noticing that yen is weak.
Yeah, I don't know what DSI was. I think it was under 10.
Yeah.
Okay,
yeah.
I haven't seen it there in I don't know how many years.
Yeah, that's true. And Suzuki, the finance minister, Kishida, they're all blaming it the yen weakness on the high energy and high raw material prices.
How about Kawasaki and Honda? Toyota, what they saying?
They should be happy.
Anyway,
the exporters, yeah.
No, I just want to say if we got back under 1780, it's kind of the inverse of the euro. They both had throwovers from wedge formations. So watch the throwover in the end back on. May have to do some work first, though.
Yeah, there's going to be some decent levels in the 117s, the 117.80, 117.60, 117.10. If it goes back below 117, then I think there might be a few running for the exit, right? The medium-term lows.
Okay.
Short-termers might already react below 117.80, 117.60, but the more medium-termers, if it goes back below 117, there's going to be a few heads being scratched, in my opinion.
Okay, I want to ask Ryan's opinion on Aussie yen, and I was watching this. I don't know. I first took a look at it several months ago because I saw the weekly here, which looked like we were going to, have some type of third drive here. And it looks like that's what's happening. And then when you look on the daily, you don't have it. That's right. So the third drive up here, is a fractal of the weekly. And this is working on the 3 of the weekly, right? And the 3 is a fractal of the larger 3. So it needs to take out 86.25, and this may be something to keep on your watch list for when you think the S&P rally could be peaking, or if you're a believer in some type of peak in yields and a commodity correction. So it's been the strongest yen cross, right?
Yeah, I think this is what we've had from this one, and we noted it, is the reaction to China, I think, more than the S&P. Because China staged a big bounce in equities. You know, we had VP coming in this morning and, you know, selling some smoothing tones about supporting the economy, supporting property sector and that sort of thing, defaults, and we've seen the Aussie bounce because, you know, the Aussie had been gaining irrespective of what's been happening in the world, but it was really the China thing that added to this last move down, and now we're seeing that reverse. So Aussie yen, you know, and we've also got this risk stuff going on right now today with the Ukraine-Russia stuff. You know, negotiations, both sides saying that compromises are possible. We might get something. You know, we get those lines, and then 5 minutes later, oh yeah, but meanwhile, Ukraine's still, you know, going to start countermeasures against Russian positions and that sort of thing. So, you know, we're getting into a point now where the tone around the Russia-Ukraine thing it's again maybe heading towards a resolution, and that's helping yen pairs because of the risk factor. That's partly behind euro dollar heading higher again because of the risk thing. Aussie as well, and Aussie yen is getting double bubble, if you like, because it's got the from China and it's got the risk bounce from possible risk bounce.
There's no reason in the world to sell it, and that's why I'm starting to look at it.
Yeah.
You know what I mean, Ryan? And a great call on a cable bottom. Did you book something?
Yeah, I've booked it in slices all the way up. I took one off just now at 131.02, move my stop up to 130.50, get the trailer moving behind it and see how far it goes. You know, no need to chuck in a winning position, as we say.
Yeah, if, on the verge of a reversal week. I know it's still a pretty compressed range, but a potential reversal week. You know, I notice sometimes when you take out the 200, that happened in Apple. You know, a lot of people finally panicked under the 200.
Yeah.
And you know, when it came to the market rebound that we had the other day, check out Apple. So Apple did the same thing on the daily. It took out, you know, everyone's watching, well, Apple's the king, it's okay. But see, took out the 200 day, went right to the wedge line and turned.
The tree got shaken and all the apples fell on the floor.
Yeah, so, you know, could be a cable bottom here.
Yeah, well, I mean, you know, you look at the intraday charts, you know, like the 15-minute charts, and we keep seeing euro.
Let's look at a tick chart.
Well, you can go that far if you want, but
I'm kidding you.
Go on a 15-minute. You can see we get these pops and they keep getting sold. And I think that's potentially the Fed influence. You know, it's Fed day today.
Right.
There is going to be people who aren't going to let things stray too far potentially because of that big risk. But I'm thinking I'm looking at what to trade today, and I'm thinking euro dollar could be setting up for a great trade. We've got this growing positive mood from Russia-Ukraine negotiations. That's positive for euro dollar. But if we get a hawkish Fed, maybe they confirm a 50 pip hike, or at the very least confirm a hike one way or another, there might be a relief rally in the dollar. And then if that sends the euro dollar lower, I'm potentially looking to pick that up to run on the Ukraine sentiment, which is positive. And
okay, what levels are you looking at?
Anywhere down to sort of 109, I think might be a bit of a push.
That was halfway back.
If it's a decent dip, you know, somewhere over 50 pips, maybe 50, 60, 70 pips over that sort of thing, that's what I'll be eyeing up. You know, if it dips 20 pips, I'm not gonna touch it. Maybe I'll try a break trade if we see sort of 110 supporting.
Here's another wedge.
Yeah, it's going to be a reactionary trade.
If I may, there's this for the FOMC tonight. There might be something to do in the metals as well. We've seen gold coming back close to 1900, silver trying back around the 24.5, and those levels seem to hold, right? I think
they're due at least a bounce, right? At least a bounce.
If the Fed doesn't go overly hawkish, I would suspect we might see a bounce in both gold and silver.
I know some guys that are calling this pullback a 4, which implies new highs.
Yeah,
I don't know about that, but certainly the hell of a break that we could retrace halfway.
Yeah, it was a very, very fast retracement.
Yeah.
Also, just one last word, if I may, because you mentioned Aussie yen, Kiwi yen, and Canada yen are both trying to break up, and Aussie yen may follow the move, but it's going, as you say, going to be very important here. In between this 85 and 86 and a quarter. If 85 caps, we might be in for a head and shoulder somewhere. If Aussie yen, if it 86 and a quarter goes, then I think we are ramping higher.
Okay.
But they're all on important levels, and dollar yen not being far, it's going to be an interesting day today for the close.
Okay, so we're kind of thinking the same thing. I was thinking Aussie yen, you're thinking CAD yen. I think Aussie yen is, yeah. And I just wanted to show one more thing. And Stel, are you here? Okay.
I don't think
I am.
Oh, he is.
Hello.
Oh, sorry.
Okay.
Multitasking big way, but I'm
All
here.
right. Well, there you go.
I just wanted to show it because I was going to, just go right to Blake, but the S&Ps, still in this. Someone sent me an email. Is it a wedge or a head and shoulders? I don't know what they're seeing, head and shoulders, but I see a wedge, and maybe we could really squeeze the market here. Breakout. Still another 70 handles away, but yesterday was pretty key.
What about a wedge and shoulders?
A wedge and shoulders.
Yeah. Nice.
I
think
we would tag this.
We have such a big binary event today, so that we can look at all these nice technicals and everything, but this is going to be pushing things one way or another. And we have also apparently developments in the Ukraine front, and there's a lot more positive stuff coming out now. Is this something the equity markets definitely feel like, or they look like they feel like everything is going to go back to normal again pretty soon. I'm always a little bit skeptical when the markets are so quick to price something. So but we wait for the Fed. That's the main thing, and it's not what they're going to do. I think it's almost universally agreed they're going to hike 25. The question is, what are they going to tell us about the rest of the year? And if I recall correctly, the market's pricing 5 more hikes or something like that.
Yeah,
I need to check Fed fund futures, but that's a decent amount, and of course they can go 50s if they want. If things are all rosy everywhere, they can, because we've said this before. This is their time. This is their window. If they don't do it now, they're never going to do it. So, especially with inflation up here and employment as good as it is, I mean, there's no other scenario where where I can imagine them having to hike faster. Obviously, inflation is high because of different reasons. It's not like everybody's out just buying everything that moves. There's a whole set of other reasons, but their mandate is inflation. Their weapon is the interest rates, and this is what they have to do. Right.
Also, we have the Omicron thing popping up. China shutdown. Thought that might happen after.
I caught that a few days ago.
Okay, so there's like another wave. There's another wave starting in Europe, isn't it?
Yes.
I'm sorry. I want to jump in here just because I was talking to Mark Chandler about this on Monday regarding China and I'm like, is it really that big of a deal? I mean, can't they see how the West is really dealing with COVID and he's like, Blake, their vaccines just aren't as effective, and he goes, and they haven't developed like the herd immunity that the UK has and the US has to some certain extent. So they are that's maybe more of a policy or the way they handled COVID early on, but it could still be an issue. I mean, I'm not saying that it's like COVID itself is an issue, but it's the handling of COVID and we'll put some more strains on our already tight supply that we have right now, supply chain. And I mean, what do you guys think there?
Yeah, they shut down their biggest port, Blake.
Yeah.
And I know that a lot of producers have really built up I'm sorry, it's 4 o'clock in the morning or early in the morning here. You know, Dale, it's fun. It's funny. It's funny trying to find my words after sleeping in a little bit more since the time change. They built up a lot of their inventories already. A lot of producers have. So, you know, is this going to be a big shock to the global economy if it's short term? I think if it's long term, then we might have a more serious issue. You know what I mean? So I don't know.
Well, you grab the charts, bro.
Yeah, I will. So how's everybody doing? You know, pre-FOMC, everybody good?
All good, mate.
Right.
And you know, Stel, you said it's going to be a binary event, and I think that's pretty much says it all. It is going to be binary. You're going to see, you know, the markets really move here, and I have to say that you know, going to, you know, just looking at like currencies just in general. I mean, look at the euro. It's really set up for a move here. I think you know, we're having a bearish consolidation, and let me just kind of map it out for you guys as far as the way I see it, and then we can go into some discussions here as far as the euro goes. You know, if you look at the euro, we're pivoting off of the 108 level, which is a big it's actually since the creation of the euro, you can say it's ultimately, you know, we talked about this on the week ahead videos for the last couple of weeks, you know, big support. You know, all the reason in the world is the euro was oversold last week to pick it up, you know, as we approach that 108. But now here we are capped by 111, which is the big breakdown point. And that was and you know, talking about trend lines, let's just go back to, here's the weekly from the highs back in 08, 2008, 2014, 2018. We pivoted off of that multiple times over the last 2 years. Then we finally broke back below that at 111. So now you're kind of trapped, technically, you're trapped between 108 and 111. And now you can see this bearish consolidation, which perfectly, in my opinion, and let's get rid of this fib here. We don't need it right now. Perfectly is, you know, in a symmetrical bearish consolidation below 111. And, you know, I mean, it's pretty simple as far as I'm concerned, you know, as far as where we're going to go post event. Like, you know, we break above 110.25, we're going to see 111 again. We break below 109 and a quarter, we're going to see 108 again. I mean, it's pretty simple from a technical perspective. And so, you know, when you said it, Stelios, it's right. It's a binary event. If it's more hawkish, or if the Fed hikes and has a more hawkish hike, and we start thinking, oh, hey, you know, the Fed's going to actually hike 5 or 6 times in 2022, that seems pretty realistic. The euro is probably going to trade back to 108, unless there's some headline about Russia, Ukraine, you know, that interferes with that. And then, you know, obviously, if we come away from today and we're like, man, I'll be surprised if the Fed actually can raise a full basis point this year, then the euro is probably going to trade back towards 111. So, do you guys have anything that you want to add to, you know, this analysis? Because I think it's pretty straightforward here.
Yes and no. I think there's a lot in the mix.
Do.
I still think you know, it's a little bit up in the air whether they're going to go 25 or 50. Today.
Do you really think so?
Yeah, I do.
Okay, all right. I mean, that's fair. I think there's less risk of that. But man, what if they raised by half a basis point? I mean, what would you do? What would be your trade, Ryan, if they did that? I'm just out of curiosity.
But as I say, I'll be looking at euro dollar on that because to match it off against that will put euro dollar down, and that goes against the Russian Ukraine sentiment, which is a daily theme. The Fed is potentially just a one-day theme for now. The market will make its move, then look at whatever else is going on. So if we get a decent dip on that, that's what I'm looking to buy euro dollar, maybe euro yen, because that's a decent risk pair again on the Ukraine situation. But as I've been saying, you know, before a few weeks ago, we were talking about it, and Steve was talking about it, you know, saying that they'd be lucky if they hike 25, you know, 25 is going to be it. But with this inflation print and with the possible inflation that's still to come through this Russia situation, they're looking further ahead. It's not about what inflation is now. It's about what inflation might be like in 3 to 6 months.
And it's going to be gnarly, right? I mean,
yeah, more gnarly than if we didn't have Russia and Ukraine. And that's what I think they're going to be looking at to try and get ahead of that, not to get ahead of what inflation is now. So they want to get that rate margin in as fast as possible, so that if they have to cut, they've got room to do so.
Well, that's a great point. And so let me ask you guys this. And Kman, I heard you a little bit earlier. I mean, look at this dollar yen. I mean, you could say, oh, well, you know, the dollar yen's overbought. I remember when I did the week ahead video, the person who commented to me might be listening in right now, saying, oh, if the dollar yen, you know, breaks out, it's overbought. So it's going to be a failed breakout. I don't know. See, we get a rally like this where the dollar yen rallies and then consolidates. This is how if you guys don't know how this all works technically, I'll just take you back to 2012 right here. You know, this is the three arrow
huge move
approach. Yeah, big move. This is what happens when you get a breakout for a reason. Again, this happened because of who was it at the time?
Three arrows, and they were intervening.
And I remember everybody on CNBC was like, "Oh, it's failing. It's going to fail here," and it's like, I wouldn't step in front of that. And I remember how every big figure move, or let's say 10 big figure moves, every 10 big figure moves, people would say, "Oh, it's so overbought. It can't go any further." And that's a perfect example in real time. If you go back to that time frame where overbought doesn't really matter, you know. And remember, Kman, you're here. Yeah. So I wanted to say, you know, the yen's weakening for a reason. It's not just you know, a dollar move at this point, right?
No. It's we've talked about the reasons, right? The very high energy, the end of the fiscal year where books needs to be closed. The importers seem to have been a bit behind the curve. Then we had those the big whales on the bid around 114.5, and they are very, very powerful. And if they trade, then all their suite of followers is trading as well. So no, there's good reasons we are here, barring the technicals.
Yeah, and how about, I mean, how many people have been non-believers just in general with the yen? Well, when we have risk off, so people buy yen just because I'm a Pavlovian response to risk off. So I just automatically, you know, buy yen during risk off and realize that's not really the right trade, right?
Yeah, I have this 5-second anecdote when Abe got voted in and he presented his arrows. That was after the quake. A lot of Japanese people actually didn't believe he was going to change anything, where I said, like, oh, this is an absolute game changer. I do not want to be long yen anymore. And even themselves said in the beginning, no, it's not going to move a lot. But then once everything started to filter through and Bank of Japan got involved, the thing took off, and we rallied, 30 big figures or so, right?
Yeah. I mean, it was nuts. And so here's the thing. I just want to point out with the dollar yen. I mean, we've broken out a multi-decade trend line, actually going back to 1990, which it's not here on this chart. I have to go to a different chart, but it's crazy because we're actually seeing now, you know, big moves develop in all the other yen pairs. And this is one of the things where you have to imagine, I mean, look at this Canadian yen. I mean, it is actually breaking horizontal resistance now. I mean, this triangle has been brewing, and we've talked a lot about it in the ForexAnalytix community, but you know, it's actually now starting to break out. So you have all of these, you know, different yen pairs that are starting to break out. And when the market is actually just recovering off the lows. So you have to look at the S&P and go, well, you know, how about if the S&P, you know, rally. Oh, here, let's go back to this chart. This is a better chart. So, you know, how about if the S&P continues its, you know, head and shoulder consolidation and bounces back to the 200-day moving average, and you have that move in yields continues, which, you know, obviously we hit a new trend high in the 10-year this week, and we're at the 161% extension. But look at, I mean, yields continue to rally. As Ryan pointed out, you know, we have inflationary issues that the Fed's probably thinking about, 3 or 6 months out globally. I mean, a natural beneficiary of that is going to be, yen pairs, well, yen being sold. So, it's amazing when you look at it all and you put together all of these puzzle pieces, and you're like, yeah, I don't know if I really want to be short dollar yen anymore, or any other yen pair for that matter. Right. So anyway, we got 5 minutes before Dale has his interview. I guess we should probably look at precious metals. I mean, aside from Stelios, is anybody else bullish gold here? I'm just kidding, Stelios.
If you note what I've been saying, what have I been saying, Dale?
No, and I didn't hear you earlier, so go ahead.
No, but I've been saying for a while. Remember, I got long and then I got out, and then I said I'm waiting for a dip to get long again in silver. 2401.
Here's your dip.
Not yet. Well, not yet.
Okay.
I think the Fed might give us the opportunity. I have a bid in, but I think I'm gonna take it off before the Fed and see what happens, and then reassess price action. But
so just so you guys know, we have a couple head and shoulder patterns, and if you look for completion for that to happen before you start looking for longs, gold still looks like we're going to 1875. Do I still have a pattern in play here? Not anymore. I had the short pattern in play from a couple weeks back, or a couple days back when we had this breakdown. Anyway, it's a head and shoulder pattern. We are at the 78% retracement right now. We could reach for 1875. Silver head and shoulder pattern actually completes a little bit lower here than what
you look at the daily on silver. Look at the 50 MA and the DMA and the 200 DMA.
Yeah, it looks like that's coming into play.
They're about to converge on a fib as well. I mean, it looks perfect down there.
Yeah, I mean, so if you want to buy it somewhere below sub 24,
yep.
Well, we might see that too. And this is a Fed day. This is where the rubber meets the road, if you will. There is a risk that we could see those levels. So, I mean, if you're looking to buy precious metals, you might get a better place to do that. One of the other things I need to point out, you look at cryptos, Ethereum, when you have like risk on, we have this nice little triangle in a big, channel developing in Ethereum. This is a daily chart. You can see it's very clear here. And matter of fact, I could even say that, that we could tighten up that triangle at this point and make it a little bit tighter. But right now, we're at the bottom end of this bigger channel. Same with Bitcoin. I mean, Bitcoin's similar, very big channel.
We're still way too close to support.
We are. And that would scare me. If I was, a crypto bull here, that would really concern me. And I think you have to, take a look at the broader crypto market and understand that it's, there's a lot of the altcoins have really been destroyed here, and that's going to obviously weigh on some of the bigger names like Bitcoin or Ethereum. But anyway, just wanted to give you a quick view ahead of the FOMC.
By the way, we do have retail sales and Canadian CPI in a minute, so
let's.
Dave's not here anyway yet.
Okay, so while we're doing this, let me just say, if you guys have not checked out the Trader Funding Program, I'm going to put a link right here. For everyone. This is a good way for traders to try to access larger trading accounts. You have to take an assessment, go through an assessment, and then once you pass that assessment, which we launched this program less than a month ago, we've got 5 people that have actually accessed live trading accounts in larger amounts, and it's awesome. So it's opening a doorway for a lot of traders to do some proprietary trading. And if you want to learn more about it, just watch the little 2-minute video at the very bottom. They'll give you a quick understanding of what the Trader Funding Program is. It's just another option for you, especially if you're trading around and you're trying to just access, larger amounts of money because you don't want to put your own money at risk or whatever the case may be. Or you just, you don't have access to that kind of money, but you'd like to have access to that kind of money. Check it out. All right. We have retail sales coming out. How long, Stelios? I was relying on
10 seconds, 5 seconds, 5 seconds.
And by the way, you get ForexAnalytix in our community with, we have Canadian retail sales.
No, US retail sales and
Okay.
Canadian CPI. Don't worry.
Canadian CPI, that's a bigger deal.
CPI is stronger.
Okay, so
by a
watch
little bit.
Canadian. See if we are at support 127. We're boxed in this 127 to 129 level. If you guys weren't aware, like this is the dollar CAD, and in our view of the dollar CAD is more of a wedge longer term. You can see it's just we're flopping around
US
like a fish.
Retail sales worse than expected, but revision is better than expected. So kind of a wash, I think.
It's going to be interesting watching retail sales here in the coming months because I'll just give you guys this is a silly example, but it's something I was just talking to my wife about last night. So I like to do some of the grocery shopping because it gets me out of the house. It's when I've been working from my home office for about 10 years, since 11 years since I moved back from Texas back home. I have worked from home. So, to get me out of the house, one of the things I like to do, it's like, you want me to run the grocery store? Sure. I'll get me out of the house. I'll go. Last night I had to go get a head of lettuce. The last time I bought a head of lettuce which was maybe like a couple months ago. I remember it being $1 for a head of lettuce. Last night it was $2. And then I came to my wife. I'm like, oh my God, I just paid $2 for a head of lettuce. And she goes, yeah, prices. But she goes, there was some news headline she was reading about lettuce in our area or whatever. But dude, that's crazy, right? That's like nuts. Like I was like, that I didn't expect, it was wild. Anyway. All right, guys. So that has nothing to do with anything else other than inflationary pressures are going to be hot moving forward. So the dollar yen just shook off that data. The euro shook off that data right up into triangle resistance. We have the Fed. I'm not expecting a big reaction here until the Fed. Dale is your guest here?
Yes. Dave.
Oh, he is. Okay, good.
Yep.
Then I just want to say thanks everybody for logging in. I'm going to pass it over to you, Dale, and we'll see you guys. If you're a ForexAnalytix subscriber, we will see you in 45 minutes on the Morning Edge. Thanks, Dale, Stelios, Ryan, Kman, and anybody else that was here that we missed.
Thank you, team. So, Dave, I'm going to make you a panelist now. There you go. Welcome back to F.A.C.E, Dave. You need to unmute. There you go. Got you, buddy. I got your back all the time, bro.
Yeah, thank you. I need that.
I know you do. We all, anyone in the public eye needs it. So great to have you back, David. And why don't we start with the elephant in the room? And of course, that's the Fed. And last time we had a conversation, you were looking for a pullback in yields. You were looking for maybe 1.5. So it was a pullback, didn't get to 1.5. And now we're at new highs. Are we approaching your levels where you think this part of the yield move could be completing?
Yeah, I think so. I still think we may make one more move back to 150 before we go up to 250. That, this last move surprised me a bit. I mean, I wouldn't have been surprised to see it back from 160 and change back to 190 or something. But this move up to 217 is more than I expected. But it still looks to me like you're likely to still try to make one more run at 150 before we, make the final push to 250 or thereabouts.
Okay.
It could go straight there and have it over with in a couple weeks. We may do that, but I don't think so. I really think more likely rates are headed back down here very soon. Well,
the market seems to be front running the Fed, and I wanted to bring up Powell, because I recall a conversation you and I had because of your bullish narrative for a melt up in equities. is that you have confidence in Powell up to a point to where, there's nothing anyone could probably do. But, that's true that you think that at least for a while, Powell is going to be doing the right thing. So in your mind, what do you think he's going to be doing?
Yeah, let's put it this way. I do think Powell's been dealt a tough hand, and I think he's doing pretty well. What you want in a Fed chairman is flexibility and somebody who isn't going to get wedded to one view. And when he first started as Fed chairman, remember, he said, I'm on remote pilot here. I'm on autopilot, and we're going to hike rates. Well, I think he learned from a big lesson there, and I think he's much more willing to say, here's where we are in the moment, but that doesn't mean I can't change my mind, or we can't change our mind. So I think that's why I give him, I think relatively highly of him in that position. However, what I'm going to tell you, I think is going to surprise you.
Okay.
I'm a man, surprise everybody, but I think this may be a one and done Fed hike.
Okay.
We're definitely going to see a quarter today. I mean, I don't think anybody doubts that. They've pretty much telegraphed that. I'm not saying Powell today is going to say this is it. I'm not saying he even thinks that right now, but this economy is heading for a recession, and quickly. We're decelerating quickly. This last move in gas prices didn't help anything. But as I said last time to you, and the time before that probably, the bond market's done the tightening for the Fed. We've already
look, here's a TLT. TLT, it's a proxy there, David.
Sure.
I mean, look at what it's done in 3 months. Yeah.
Yep. And look at the yield curve. Look at which is almost inverted. Look at junk bonds have come down right to a point where I think it's an inverted head and shoulder. Put up HYG, and I think you'll see something there. But put it up on a 4-year chart.
Okay. Looking for it. I know I have it.
And even investment grade bonds, all the bond market is backed up. And what I keep saying is this is a more fragile economy than we've ever had. This is
there's
not
HYG, Dave.
Now put it on a 4-year, if you can, or maybe even a 5-year.
I didn't know. You should have told me you were bringing your telescope today. Okay. There you go.
There. Now you can see there, looks to me like you go back there and you see a left shoulder, you see a right shoulder right here. I think we're going back to 80. We're going back to 89.90 before we roll over much more dramatically. So I think we've pretty much completed the tightening. I think what's ahead for both stocks and bonds is a big rally. I came out yesterday on Twitter saying this isn't just a correction bottom. This looks like March 2020. It looks like 2003. It looks like 2009. Obviously not quite as dramatic as any of those, but this is a big bottom in the stock market. We're going to see something over the next and it might even stretch beyond 6 months, but certainly the next 6 months, I've been talking about a melt up. That's what this is. But everything says systems go. You're going to see big moves in an awful lot of stocks and groups. And nobody's prepared for that. I can tell you, I had thousands of posts yesterday telling me I was an idiot for thinking that. So there's nobody bullish out there right now. The sentiment is as negative as it can get.
Yeah, the sentiment is, Dave, and Blake, I'll let you in.
Yeah, sure thing.
That price damage on the averages hasn't been that terrible compared to previous time frames you talked about, but sentiment definitely is. I mean, I haven't seen the people this bearish. I can't remember because I'm in my 60s, but it's been a long time, David. All right, go ahead, Blake.
Hey, David, first of all, I'd like to say thanks for joining us, and this is Blake, and I just wanted to say, I know you're bullish here, and that makes perfect sense actually. And that the Fed is really walking on eggshells with the economy, and maybe it's more of a one and done. I think most people, I mean, you look at every bank out there, every bank thinks that we're going to see 4 to 6, maybe 7 hikes this year. But how would, and I guess I just want to ask you this: if the Fed is faced with the economy or inflation, and inflationary pressures are probably going to be, increased because of what's happening with, the Russia-Ukraine situation. It's going to be a global, inflationary push that no one really even saw coming 2 months ago. What you're saying then is the Fed would rather, instead of cure the inflationary issues or try to tame those, they're going to get behind the market and say, we've got your back. We're not going to be raising rates. Is that basically what you're saying here?
The Fed
not really. No, not really. Because to some extent, yes. But what I think is a big erroneous assumption out there is that the Fed watches the stock market and that's what they're worried about. The Fed is watching the damn economy. I mean, people don't understand. This economy is being hit hard. Gasoline prices went up $1 in a matter of months. Heating oil went through the roof. People, below the 1%ers are finding that they have limited budgets. Consumer spending. Look at the consumer stocks. Look at the consumer discretionary stocks. Look at Ford. Look at General Motors. Look at what's happening there. I don't think people at all yet recognize how much this economy is decelerating. And so that's why this looks like, that's why I use 2003, 2009, 2016. This economy is going to force the Fed the other way. Sure, they are between a rock and a hard place in terms of inflation and the economy. They're going to choose the economy, and it's not just the U.S. Think about what's going on in Europe. Think about what's going on in China.
Yeah,
I think people are blind to the fact that the Fed isn't stupid.
You sound like such a bear right now. You sound like Peter Schiff.
Let me finish. The China is in trouble, right? And again, I'm not talking about near term, but Europe's been hit hard by what happened in Ukraine and was already soft. So I think what people fail to understand is the Fed sees all that. They're not sitting here in a vacuum saying, well, gee, inflation's going up, we're going to ignore the economy. They've got to look at both. And even though it's not in the data yet to say the economy's in recession or going in recession, they are seeing things. So I think, and like I said, I'm not even sure Powell's there yet, but I think you give them another month of this kind of where we're headed. And I think you're going to look back and say, hey, it was a one and done, Fed move. And frankly, the tightening took place before the Fed ever started. I mean, the tightening was the bond market. So, and then it, certainly Ukraine helped the tightening in terms of what happened with prices. So I just think what's happened is what happens at all bottoms. Everybody becomes a macro analyst, and most of them don't do it well.
Yes, all the investment sentiment surveys, Dave, I haven't seen numbers like this on S&Ps and NASDAQ. And in fact, last time we had a conversation, it was this day right here. And we were on the air before the reversal, and we were talking about there could be reversal. And so far, it hasn't been able to get back and check this line, and looks like a breakout over, 43.80 or so. So your favorite groups are what in this move coming up?
I think, as I've said before, I think this is going to be a very broad rally. It's going to be both. It's going to be both growth and value. It's going to be both cyclical and non-cyclical. It's going to be big cap. It's going to be small cap. And the areas that I like the best, I think semis are going to scream. I think you're going to see the autos do very well. I think you see airlines do well. I think you're going to see industrials do well.
Miners.
I've got copper going to $6 here in the next 6 months.
So miners you like as well?
I like miners. I like a lot. Steel, I like a lot.
You like everything but banks and energy, right?
Exactly. Yep. I think the interest rates, if they come back down as I expect here in the next couple months, are going to hold the banks down, and I think energy rolls over here. I've been wrong. Obviously, Ukraine took them up,
Yeah,
but
right.
I still think that without Ukraine, I think oil was rolling over, and what you got is a 2-week pop. And I think it's starting to lose that now. So I think at the very least, oil goes back to 85. WTI goes back to 85. We'll see where it goes from there. It might fool around for a while, but if it breaks 85, I think the oil move is over.
Okay. Yeah. See this monthly candle, Dave?
Yep.
Yeah. Not bullish. So you've had a lot of success recently in metals. I know you took heat in the metals, as like one of my associates did for a long time, and finally being rewarded. And look at best of breed. One heck of a move in Newmont. Would you tell people to book profits or just buy a break in the miners now?
Yeah. Obviously, I can't give advice, but what I will say,
that's right.
What I will say is that this move down this last 5 days in precious metals is a classic. What you see in a new bull market or in a bull market is corrections are steep and fast because they don't stay down long. So I my target pre-bust, meaning the next 6 months for gold is 2,500, for silver is 50. And I'm coming to the conclusion that those are going to be proved to be too conservative.
Okay. And here's your copper play in Fremont. So we've covered a lot of ground. Anything, and I know that you also like the Aussie. Is that correct in your price targets here in Aussie?
Yep. I think the Aussies. I think both. The loonie and the Aussie are. They're commodity economies. I think they will benefit from this move in the metals and other commodities. So I do like the Aussie. I do like that. And I actually like the euro here. I think the euro hit bottom, came down to the bottom of the trend line, or down to the trend line. And I think that can go to 130 versus dollar. So what I'm talking about is a weak dollar here also. I think the dollar, what we did with sanctions and everything, everybody knows this. It's been the talk of town for the last couple of weeks, but we're really pushing people out of the dollar in terms of Russia and China for sure. And so
they saw it weaponized, the financial system weaponized. And you know what, Dave? And we're making or testing new highs up here. I saw an interesting news article. I don't know if you saw it, that Saudi Arabia is open to accepting oil payments in yuan. Okay, so we've had the petrodollar for what, 50 years?
Right.
So that would also cut back demand for dollars, wouldn't it?
Yeah, that's what I mean. I think this whole thing where we started using the dollar as a weapon is getting other people to wake up and say, hey, if we can find alternatives, maybe we should start thinking about that. So that becomes something that could push the dollar down. I think that chart basically says we retested the highs and we're rolling over. So I have an 80 target on DXY. I think I think that's a target for 2022. So that's a big drop if I'm right.
Hey, Dave, this is Blake again, and you struck a nerve with me since I love currencies, and you mentioned earlier that you thought that the Fed wasn't going to be as aggressive raising, it's going to be basically a one and done, and expectations are completely the other direction. It would be very interesting if the dollar fell as dramatically as you're expecting, with the Fed, becoming less hawkish. That would be something that I don't think any of us have ever seen in our lifetime. Would you agree with that?
Well, keep in mind, if you're less hawkish, you're pushing rates down. I mean, you're pushing money in, so you're increasing the the dollar.
Oh, I'm sorry. You know what? It's early in the morning for me. You're exactly right. Actually, you're exactly right. But that would be a big drop. I mean, because expectations are so frothy right now. So.
Oh yeah, no, it'd be a huge drop. But I think that's where we're headed, and I think we're heading there. I think we're heading there. If you look at, when was that? Back in my eyes aren't too good here. The
COVID 2020 or
no, way back in 2014, was it 15?
Oh yeah, this was a high 16 up here.
No, go back a couple more years. The big run up.
No, this okay.
No, back right there. Go up. No,
oh, okay.
You're up. That you're going to retrace that is what I'm saying.
Okay.
This isn't a very clear head and shoulder, but that's what it is.
Yeah,
that's a big top. That's whatever that is, 6 or 7 year top, and I think you're going down from there.
And you're not a Cassandra saying it's the end of the dollar's reign, because when we get to the bust, and I know that's down the line, you're talking what for the upside in the dollar?
Yeah, I think the dollar can get to 120, maybe even 140 in the bust. Again, the bust to me is the biggest decline we've had in the post-World War II era global economies. Bear market bigger than anything since 29. In that kind of environment, they're going to still run back to the dollar. So I think you can have one last hurrah on the dollar after we get this decline. It all sounds crazy. It's big volatility. We're just in a very unusual period at the end of a super cycle, or whatever, and so I think you're going to see moves that we've never seen before, or certainly moves that happen a lot faster. So
okay, well let's nail them down. Long-term objective in S&Ps.
I think 6,000, and I think that's pretty close, but that may not even be the high.
Okay.
And that's
NASDAQ.
this year. That's this year.
NASDAQ.
20,000.
Okay, and let's go with the Dow over 40.
45,000.
Okay. So David's basically talking 30-40% higher, and then that'll be it.
And by the way, the Russell 2000 I think can get to 3,000.
I know you like.
So.
Okay.
So they're basically from here. You're looking close to 50%, and some, certainly in the Nasdaq. So, there are. I think SMH can get to 400. That's a huge move. Over a 60% move. So, QQQs, I think can get to. I forget what the number was I had, but it's well over 50%.
What was your target in semis?
400.
Okay.
On SMH.
All right. So some controversial calls, especially in this time frame where the whole world is bearish, Dave, and some great calls you made in the metals, and we're looking forward to seeing you be right, because that at least means God, you could really make a pile of money on the upside if you ride it correctly, and really be set up to be short for what's going to be historic as well. I mean, we're talking about history both ways, big time.
Right, yeah, definitely. And I think people just need to step back and realize, fight your urge to go with the consensus and the sentiment, because it's just an overwhelming consensus that everything's negative right now. And I think at the top, it's going to be an overwhelming consensus that this thing has a long ways to run, when it should be time to get out. So, people are going to have to learn that sentiment needs to be responded to in a contrary way.
And you don't look for new highs in the treasuries, just a bear market rally in treasuries while this is happening?
I think TLT can get back to 145, maybe 148, something like that.
Look at this, Dave. There's 200 days up here.
Yeah, where's that?
45.
Yeah, 45. So yeah, something like that. And
okay.
And so that'd be a nice rally from where we're at. But it's certainly, I think it's still, if you stretch out the chart, I think it's still basically a right shoulder and a head and shoulder top.
Okay. How about this is a shoulder, this is a shoulder? What you're talking about. You're talking eventually bonds under par.
Well, my target on in the move after this rally, my target on TLT is 120.
Okay.
Could get a little below that, but
Okay.
I'm not looking for much above 2.5 on the 10-year, much above 3% on the 30-year, because I think the bust will take you right back the other way. And I'm still thinking we'll see lower lows in rates one more time, meaning below the 0.40 on 10-year. I think
Right.
you could get a negative 10-year in the bust.
Okay.
And probably get the 30-year down to, a quarter or a half. And then from there, as you know, my view over the balance of the decade is that you're going to retrace back to the early 80s rates. So 15% long bond, 15% 10-year,
Right.
20% T-bills, 21% T-bills. So this is kind of the last stage in the cycle.
So, in every crisis, the danger is you miss the opportunity. So, David, if people didn't have espresso or, double charge caffeine, I think you woke up some people this morning with some of your views. And I know you're not trying to be a shock jock. You really believe in this stuff. I've seen some of your forecasts work out very well. And I wish you and everyone who follows you a lot of green in the months ahead. I really appreciate you sharing your stuff with us.
And Dave, I want to say this is Blake once again. I just want to say you have some really amazing views. Would you be interested in sharing some of your views and your charts on the Traders Summit at some point?
I'm sure I'd be glad to. What I tell you is that Dale does it for me. If you guys can present charts, I'm more than glad to.
Oh yeah. I would just love to have your views and a one-on-one with you there. It's a little bit. It's a different community, but it tends to hit a lot of different marks, and would love to get your views there as well.
Sure.
Yeah, David's not shy. Go ahead.
The one thing I will tell you is I'm not a trader. And so what I find on Twitter is the people that can't understand my calls are traders, because they expect everything to happen immediately. And as I say, these are trends that play out over months, not days and weeks.
Oh, we love it. I know having that macro theme and backdrop is great for traders to cling on to. So appreciate your thoughts here today.
Sure, you're welcome.
All right, David, I call everyone my trading warrior brother. I guess I have to call you my contrarian brother. I really appreciate you being here, and some very interesting times. And so cool that you and I get together when we're very close to inflection points a lot.
Yeah.
So there
You seem to pick them.
Yeah, so I'll come up with some dates on the calendar, and really thank you, David.
Okay.
Good luck, and let's keep in touch. Appreciate all you do for the trading community to at least give people balance on the other side of the coin.
My pleasure. Thanks, Dale.
All right, buddy. So you can follow Dave at Dave H. Contrarian on Twitter. That's it. That's where you follow him. That's where he tweets, and follow him today. So that's going to be a wrap for us. I want to wish everyone good luck on the Fed. You can join the team in 17 minutes on the Morning Edge. And remember, most of all, I know we're talking about money. Don't just count your pips. Count your blessings, and you could always find something to be grateful for. And I'm grateful for what a great pre-Fed morning we had. So everyone, take it easy. Good hunting. And we'll be back with you tomorrow. Adios. Thanks again, David.
Thanks, Dale.